All right, guys, in today's video, I'm going to do something a little different. I'm going to go over the Euro USD, what I'm still holding, and what I'm looking for in terms of the daily chart, but also some long-term plays on the Euro USD, which I've talked about before, but also the British pound against the US dollar and the Australian dollar against the US dollar. I'm a big advocate of long-term positions. It gives you an idea of what direction that you want to take in terms of what the market's going to do in the next quarter or the quarter after that. And this way you can position yourself to trade in that direction so that you can take advantage of opportunities that can yield 500 pips all the way up to 1,000 pips. And I'm going to go over that to show you that that's how I've done trades. That my biggest trade yet has been 1,100 pips on one trade. So going to go into that, but first we'll take a look at the Euro USD, what it's doing here in the daily chart. I'm still holding a long position from way back here, and I'll get into the reason why I'm still holding, but you can see it's just been sideways for the last, I don't know, since November. And we had this little dip here, but again, these long-term median levels and short-term median levels, I wanted to wait to see if the market's going to go below that to give me an indication that we were probably going to go lower. But of course, the market found some support here, move all the way up. And right now, I think I'm still up maybe about 60 pips, even though I was up at one point 200, 225, maybe a little bit more pips on the upside. But right now, I'm still holding this position to see if this market's going to push back up. We're still in this yearly pivot zone that's finding support. If I use the replay tool, the last video I did, we were basically hanging around here, right? Not really doing much. And it's expected, right? Because New Year comes out, not much action is going on. It's not always the case, but once the new year rolls around, at least for the first week, maybe even two, the market's not really going to do too much, and it's going to hang around just like it did here. But finally, it finally broke to the downside, and now it's finding some kind of support here. And I want to see if we have any type of follow through. I'm still looking at this main pivot zone as one big area. So if the market were to come down and start trading below 1.0740, then I would say, okay, maybe this market's going to go down. But until then, I'm still on the bullish side and still want to hold for the long-term target, which I've spoke about before, which is 1.15. Let me just put this over here, this level right over here. So this whole area over here is what I would say is a support. So the market's still going to find some, if we push back up, the market's going to find some support somewhere in this area and then maybe make a push to the upside and test this upper level up here, maybe 1.11. But I want to see the market get back above this pivot zone so that it gives me a little bit more confidence to hold on to this trade and see what the market's going to do for the next quarter or going into quarter three. So far this trade looks okay. We see some support over here, and then the market, if we find support here, it's actually also a combination of a hidden divergence, right? For those who don't know what a hidden divergence is, it's basically when the market's doing higher lows, and then the MACD or whatever indicator you're using is going to show you a lower low. So I can just draw that quickly for you here. Okay, now again, this is just an assumption that this is going to be some type of support. So if that's the case, we also see the MACD here making a lower low as opposed to a higher low on the actual chart, which is price action. Okay, so we're going to have to see what we're going to get tomorrow. Are we going to get a push up, or are we going to go further down into this zone down here? It kind of matches up with the previous support, but there's also a long-term and a short-term median level there to see if this market's going to find support down here, or it's going to hold on to this area up here. Okay, so now my long-term view on this, I've said it before, it's a 1.15, and the reason why is because I go down to the quarterly chart, and I see this really large falling wedge, and with some divergence to the upside. Even if I go down to a monthly, you can still see that the wedge is there in play, right? This is how you capture the big moves. You got to look at the long term. You got to look at the long term time frames to kind of position yourself on the lower time frames. Which, in my opinion, I put a lower time frame as a daily. That's my base. So in the daily chart is where I want to position myself to capture these larger moves. So again, I know it's really a long term outlook, but I think that's very important to take a look at so that you can position yourself in that direction, whatever direction is going to go. So based on that, this is a bullish pattern. Now, when exactly is it going to take off to the upside? Don't exactly know. However, we see that it's starting to get a little narrow down here. And if I had to position myself to go for it in one direction, it would be on the bullish side. Unless it starts showing a significant move to the downside, then obviously you have to change you don't want to get stuck on one idea and just continue to, go long if the market's going to the downside, right? So that's my idea for the Euro USD. Now, staying on the same time frame, if I go to the British pound against the US dollar, actually has a cleaner look to it in terms of in terms of a falling wedge. But the British pound against the US dollar has like a more distinct wedge to it. Um, at least it's the way I'm looking at it. If we look down here, we see some divergence to the upside. So that also indicates a possibility of a strong move to the upside. And if I was looking for a target, I would be looking at somewhere about 1.4. Right now we're trading at 1.26 and change. But if I had to position myself on the daily time frame, I would look for 1.4 as a target. Another one to look at, or actually before we move on to the Australian dollar, the US dollar, it's also very distinct on the monthly chart. You can see the British pound against the US dollar with a very nice divergence. Like these patterns, these things build up over time. And again, this is how you capture those big moves and just ride it out. The trade can take a month, it can trade 2 months, but it doesn't necessarily mean that you need to just enter with one position and ride that whole position, right? There's always going to be fluctuations on the shorter time frames, but when there are pullbacks, you're still riding in that direction. So you can add some positions here and there. I don't feel like you should add any crazy positions, right? I feel like your base position should be your strongest one, just in case the market pulls back a little bit more than expected. But for the most part, you still have a general idea of where the market is headed based on your long term view. All right, we'll take a look also at the Australian dollar, US dollar. Now, this is a little different. This is actually my favorite pattern to trade, which is a broadening pattern. For those that don't understand what a broadening pattern is, I learned it from a book called The Encyclopedia of Chart Patterns. I've been trading it for over 10 years, and it's one of the best patterns to trade in terms of how powerful it can be in terms of the movement. Okay, it can be stagnant for a little while, and then all of a sudden it starts taking off. So I've seen this pattern play out on a daily chart, weekly chart, and obviously the longer the time frame, the more powerful it's going to seem on the lower time frames, such as the daily. But you can see here, it's still some type of divergence going on. If I draw the divergence from here to here and here to here, okay, this doesn't necessarily is not necessarily in the category of divergences because we have a low here and we don't have a lower low. So I guess you can't really say that this is a bullish divergence. So that's not really, it's really not that clear. This is certainly a divergence. This is a low, a lower low, and then the MACD has a low here and an obvious higher low over here, indicating a bullish move. And there was a bullish move here. However, this whole thing here is a general bullish pattern. If we take a look on the quarterly chart, it's actually a lot more clean. So you can see how nicely that's developed. So again, if I had to pick a target for this pattern, it's usually about, and I should have done this on the Euro USD and also the British pound against the US dollar, because there is a measuring aspect of where to target these breakouts in terms of when they break out, where you're going to target, right? Where's the next level to look for, or what level that are you looking to exit position, or at least half of your position. Generally speaking, a lot of these patterns that break out based on textbooks and a lot of articles I read over the years, or back when I was learning about these patterns, they would say that the markets usually returns about 75 to 80% of the move, which would be up here. I have not found that in terms of my own personal experience. Usually what happens is that the market caps out about 50% of the move. Now, I've seen this play out on multiple, I could probably do it on another video, but I've seen this done in charts on equities, ETFs, Forex, and it's always the very similar target. It's about 50% to 40% being conservative. And the way I do that is that I use a Fibonacci tool. My Fibonacci tool, or my Fibonacci levels, are a little different. I designed them a little differently in terms of round numbers. So for example, a 61.8%, I just rounded to 62. A 38.2, I think it is, or 38%, I rounded it up to 40. So you just see here for a second. So when I see a big pattern like this, I look for what levels am I looking to target, or where am I expecting this market to run off to if it does. I'll take a Fibonacci. I'll draw it from the very top of the pattern, from the highest wick to the lowest wick point. And this will give me my levels. Okay, I don't know if you guys can see this clearly, but here it is. So a conservative level here would be 40%, which kind of has confluence with this whole level right over here, this previous resistance. If you guys can see this strong resistance here and resistance here before the market comes down, and now it's just like pretty much going sideways. Or 50%, which is all the way up here, and it's about a little under 85, 0.85. But I also like this level because it matches up, 50% matches up with the main pivot in terms of long-term pivot levels. So I'm looking for the US dollar to take a pretty big hit, and for the Euro USD, British pound USD, and Australian dollar USD to head to the upside. Now, when exactly is going to start taking off, we don't know, but it's something to keep an eye on to start trading in that direction once we see if the market starts gaining steam to the upside. We can take a look at this on a monthly. The pattern still looks really good. And also, if for those who don't really understand how this pattern, because I know it's about perception, right? But I believe in when I'm telling you that this pattern works really well. But for those who can't really see it or can't really understand what this pattern is, you can still put this as let's say a triangle that breaks out to the upside. And if I remove this, or rather, I just change the direction of this, and I draw it across. Okay, it's not going to be perfect, but you can see it is a descending triangle. Usually descending triangles with a bullish divergence tend to take off hard to the upside as well. So for those that are familiar with descending triangles, you can look at it as this way as well. Okay, this is a very long time frame outlook, but if I come down to the monthly, you'll see that the same thing. You see how things start getting really consolidated and tight in here, even though it's taken about almost 2.5 years from 2021, 2022, and now we're just getting started on 2021, 2022, 2023, and then we're just starting 2024. So you can see how things are starting to develop, get really tight here. But again, the pattern tells us where this market is likely or potentially going for the next 3 months, next 6 months, okay, maybe even later into the year. But the general idea of where the market's going to go. So with that said, I'm going to go back to the Euro USD. That's basically what I'm looking at over here. And if we start making a move to the upside, if I go back to the daily, we want to see this market get back above the pivot and then start trading up here. As a matter of fact, you can probably even draw a trend line from these two tops. And if we start trading above this, then that's a good indication that this market might start building some, have some building blocks to start moving to the next level, which would be 1.115. Okay, but we still want to watch this level here, just in case the market starts moving lower. We have to watch this area right here and make sure we don't start trading below 1.074, or else that cancels out, or at least temporarily cancels out the whole big picture of the bullish outlook. All right. So with that said, I hope you guys found this informative. If you guys have any questions, you can head over to internaltrader.com and you can send me a message there. You can reply in the comments. Or if you're interested in working with me, you can even head to internaltrader.com/, VIP coaching and schedule a free 30-minute call with me. And I will show you exactly how I look at this, how the market's from a long-term perspective, so that you guys can position yourself for bigger profits and actually trade less than you have to, be in and out of the market. So I hope you found this video informative, and I'll see you in the next video. Take care.